Here's the real estate market update for the Philly suburbs. It is August of 2024. Let's see what the pulse of the market is in our area. I have a lot of wonderful graphs and charts to share with you today about the national market, and then we will extrapolate that to our own market here. As usual, we'll talk about mortgage rates, we'll talk about the inventory levels, the home prices. Yes, the buyers are a little tired of, the crazy rising prices. And what's the foreclosure market showing us, because that's a good indication of whether the market is going to crash or no. This time I have a very interesting specific chart for you regarding aging homes. So stay tuned till the end, and that's one you don't want to miss. So here I am, your local Philly Suburbs Realtor, bringing you the information you need so you can make some informed decisions for your family. Stay tuned. The real estate story over the last few years has been low inventory and rising prices. So the inventory levels have been so low, the buyers are complaining there is just not enough homes for us to buy. Well, that's shifting now. This is a plateauing market. The tide's turning a little bit. You see rising levels of inventory out there, especially in our Philly suburbs market. The homes are sitting a little longer if they're overpriced. If they need a lot of work and updates, they need a good price reduction before they will sell. So you see a little bit of a shifting market currently. The home prices are not dropping though. So the question is, why do the buyers still feel like there are not enough homes on the market? Because here's the story about expectations for the price that they are paying. The prices have risen so high that they expect perfection at this price, and they're not quite getting it. The real estate story for the last few years has been rising prices. It's been an unprecedented increase in home values over the last few years. So sellers are very excited because they have got a lot of equity in their homes, buyers a little frustrated. So we're in July of 2024, and where does the pricing stand? There's a lot of important people in these organizations making their predictions, Fannie and Freddie, Zillow, Mortgage Brokers Association. They're all talking about price increases, but at different paces, at different percentages. So there is no talk about prices going down, but it is just acceleration that's slowing down. Here in the Philly suburbs, in my local market, I'm seeing a slowdown as well. Homes have to be in top condition to get the top dollar. If you're overpriced, you do sit on the market for a while, and that one price reduction is needed before it gets sold. So we're seeing the market plateau off a little bit. That crazy acceleration has stopped, and unless it is a really updated, move-in ready home in a great location, and those always sell at a premium. So what's happening with the foreclosures? Is this market going to crash? And foreclosures are a good indication of whether the market is going to crash. So here, you see everybody's worried about the 2009 and 10 crash. So the prices had been escalating from 04 to 07, 08, and then the market came crashing down. And so people fear the same with this price escalation. But that's not going to happen. Why? Because that last one was caused by the subprime mess, by the loose lending standards. Our lending standards since that mess have been stringent as ever. Only people who can afford these loans have been getting these loans. And, the foreclosure levels, there was a moratorium for a little while during the COVID years, the foreclosures have increased since, but they're not going to go crazy. Why? Because the home prices are high. People have a lot of equity in their homes, and their mortgage, evaluation standards were pretty stringent. So they could afford the homes when they bought them, and there were no subprime loans that were handed out. So now people are sitting with a lot of equity in their homes. There's no way they're going to leave their keys behind and walk away from the homes. In fact, I'm going to say even the little bit of foreclosures that we're seeing in the market, it is someone who spent irresponsibly. You pulled some home equity loans out of the equity you had in your home. You didn't have, you did some indiscriminate spending to be able to get into foreclosures at this time. So no market crash happening anytime soon. August is a very slow month in real estate. I traditionally always said, hey, everybody's at the beach or on vacation during the month of August. So it often tends to get slow, and we will see the activity pick up in September again. But it doesn't go down to zero. So we're still seeing homes sell, and there's a lot of activity going on. And let's talk about inventory levels. They're creeping up slightly. So in the market where everybody was saying, oh my God, there's no homes to buy, That's not true anymore. The homes are sitting slightly longer on the market. We are seeing here in Chester County area, we're seeing the days on market creep up a little. And why does that happen? That happens because the homes may be overpriced, or the condition, there's a mismatch between the price and the value of the home in the minds of the buyer, which is why that craziness of that first weekend, multiple bids, going over asking, we are seeing a lot less of that happening now. The buyers have paused and they're like, well, I'm not going to rush in the first weekend, let's wait and see what's happening. So we're seeing that with move-in ready homes as well. And it's happening more so with homes that are not quite move-in ready, that are a little dated, that need some work, and they will peg probably a drop in the price before they can attract some buyer attention. What's happening with the mortgage rates? The Fed has just made a recent announcement. They're not making any changes. Of course, the market is pretty volatile. It goes up and down based on a whole bunch of other factors. I had a client who actually was able to lock in a 6.375 for a 30-year fixed, excellent credit. So that's a fantastic rate. We haven't seen 6.375 in a really long time. So my recommendation regarding interest rates always is, you can't time the market perfectly. So if the house is just perfect for you, go ahead and buy it. You can always refinance later and reduce your monthly payments. Make sure that the home is affordable though. You don't want to kind of cross that border of affordability with, the monthly payments. Do you live in a home that's about 25 years old? Well, you have a lot of company. There was a huge construction boom in the 90s, and a lot of single family homes were built back then, and they're all aging now. According to this chart, they're talking about remodeling years. So, those big ticket items like roof, HVAC, windows, they all need to be replaced in the 25, 30 years range, some maybe earlier. And there's also the cosmetic changes. The styles have changed. Your kitchens and baths, you're moving away more from the Tuscan colors, the burgundies, the yellows, the golds, to more neutral tones like off-whites, grays, and really natural colors and black accents. So what part of your home you want to update that adds the best bang for your buck when it's time to sell? That changes individually. Just follow me on this channel, and I always keep giving tips about those. The biggest news in August of 2024 for real estate is the whole settlement with the National Association of Realtors. If you haven't seen my video regarding that one, check it out here.